Hey guys, what's up? Welcome to another episode with me, Shashank Odappa. And we recently did a video called Two Small Cap Funds. And I saw a lot of you guys like that video as well. So a lot of people also requested in the comment section that Shashank, can you do two mid cap, two large cap, two flexi cap? So what I'm going to do is very quickly, because we won't take so much time to do these videos because I already did one on the small cap. And if you haven't, definitely go check that out as well. So today we'll just quickly go and check some very good large cap funds. Okay. Now, last time what happened is when I did the video, there were some experts in the comment section talking about Shashank, why didn't you look at Sortino ratio, Sharpe ratio, Jensen ratio, Trenner ratio and all of that. But this is where I don't like most of the people in the market right now when they do things like analysis paralysis, right? Because in that last video, I had shown you the last 10-year returns of the different kind of funds. Now, obviously, past returns does not equal to future returns. But all the 10, if you see most of the mutual funds right now, and if you extrapolate them on a long-term standpoint, overall, pretty much they're at the same range of return, right? You will not see very, very, very different alpha between two funds on a long-term 10-year period. Why this is the case is because if you look at the law of average returns, if you just take it over a long period of time, everything becomes averaged, right? And that is something that we have noticed with a lot. So if I look at Sharpe, Brenners, Jensen, all of these ratios, Sortino, on a 10-year time frame, it doesn't matter. And if I look at it from an SIP standpoint, I am not doing SIP for 1 year, not doing it for 3 years, not doing it for 5 years. If I start an SIP today, it should be for minimum 10 years, maximum 20-25 years. And that is the goal that I really want to focus on, right? So in the long span of things, these 1% here and there, you can never optimize. So don't try to optimize for that. I know a lot of people do this as well. They look at a fund, they see that their fund gave 13% returns. Somebody else's fund gave 14.5. They will switch the fund to the 14.5. It doesn't work like that. 1% difference mein kya hoga, right? Everything reverts back to the mean. But either which way, that's not our point. Let us look at two large cap funds from a long-term standpoint, 10-year standpoint. And I'll show you the law of averages as well in this episode. Also guys, before we start the video, I just want to thank our sponsor, which is Grow, as we are now a part of the Grow network. And because of them, we're getting such amazing content out for you guys. So if you want more information about Grow, you can definitely check out the link in the description below. Now, first things first, let's go check all the different large cap companies that are there from an investable universe. First, let me just sort it by AUM and show you that if I just look at the biggest AUM based large cap funds, we will see ICICI Prudential is there, SBI large cap, Nippon India, Mirae Asset and HDFC large cap. 5 are the top funds over here, out of which ICICI has a 5-star CRISIL rating, SBI has 3, Nippon has 5, etc., and so on. Now, if I look at the returns of these 10 years, and if I again put it as the top returns to bottom returns, you will notice that the top return players are all in 15%. Now, remember I told you that over a long period of time, the difference becomes very less between each player. It's not like one guy is sitting at 25% and the others are sitting at 15%. So here you can see that the best one was Nippon India large cap at 15.96, then 15.73, 15.73, 15.11, 14.89. Basically, the top 5 with respect to returns are only differentiated like this. If I look at it from top 5 AUM, you will see 15.73, 73, 13.99 or 14, 15.96, 14.89, 14.45. So literally all the top 5 right now from a last 10-year standpoint have been in the difference range of 1 to 1.5. Now, I do agree 1 to 1.5% is a huge amount when compounded over 10 years. But you should also understand that I will not sit and optimize for this 1.5% every single time because I don't know what the future is going to say. Even these returns that you see right in here are past returns. We don't know what's going to happen in the future. So if I know that everyone eventually is going to be there in this 1.5% range, I shouldn't bother too much about it. But either which way, let's go deep into it and understand a little bit more. If you look at the last 5-year returns, you will see a lot of fluctuations here because there is Mirae Asset that has not done a good job and also sitting at a bad CRISIL rating of 2, whereas Nippon India is still sitting at a high rate. I think if I just do last 5 years, you will see that Nippon India again is in the number 1 position. ICICI is in the number 2 position. Now, these two funds are actually the top 2 funds with respect, the top 3 funds with respect to AUM as well. So even on a 5-year standpoint, they've done well. Even on a 10-year standpoint, they've done well. Both of them have a CRISIL rating of 5. And if you look at the AUM, it's 71,000 crores and 44,000 crores. Now, there is another concern here. A lot of people have this misconception that if the AUM is big, then this fund cannot get returns. But this fund has been having a big AUM for a very long period of time, and it has significantly given good returns again over a long period of time. Whether it is 10 years outperformance, both have become very close, 15.73 and 15.96. Whether it's 5 years, 22 and 25, whether it's 3 years, 18 and 19%. So they have been very strong. But I will look at 10 years because I believe in long-term gaming. So that is basically how I will look at things, right? Now, if I had to look at the ICICI Prudential Large Cap Fund, so let's quickly go check ICICI Prudential Mutual Fund as well, the Large Cap Fund. Now, as you know, SIP works in this way. Over a long period of time, you will end up making a good amount of money, assuming you stick to your SIP. CRISIL rating of this fund is 5 right now. If you do a monthly SIP of, let's say, 10,000 rupees, which is very affordable for people over the last 5 years, your return would have been approximately 53%. But again, last 5 years has been a great year. So don't expect same returns of 5 years. Hence, we go deeper into 10 years, and we can also take out 1 or 2% away from averages, right? Looking at the holdings, these are some of the holdings that they have. And most of the holdings is now on banking, which is HDFC Bank is sitting at almost 10%. ICICI Bank is sitting at 9%. So most of the holdings is currently 20% of this entire mutual funds holding is in HDFC Bank and ICICI Bank, right? Now, coming down, if you look at the equity cash component, currently they are almost fully invested. They are 93% invested into the market. 6% is still in cash for some short-term opportunities. 32% of this basket is sitting in the financial space, right? And energy utilities are also there, but 32% is basically in your banking and financial institutions. Now, for all the people who are looking at Sharp, Sortino, and all of that, so Sharp is basically risk-adjusted returns, which takes in complete volatility of the stock. Sortino ratio is also risk-adjusted return, but takes in more of drawdown volatility as well. In a way, higher Sortino ratio is good, higher Sharp ratio is good, lower beta is good. So beta is less than 1, which is less than the market. So this is good, and alpha is also pretty good, right? So overall, this looks nice from all the fund category standpoint. And if I had to look at the P ratio, it's at 23, very similar to your Nifty P ratio as well, because it is a large cap fund, and top 5 holdings constitute to 36% stake here as well, right? Now, this is one. Expense ratio is now very important. Expense ratio of this fund is 0.86. Why we look at expense ratio? Because this is the amount of money that goes away from your returns every single year. So if you look at it, 0.86 is over here, right? So which is okay. And the fund manager has been there since 2018. He's been there and he has been continuing this fund since 2018 as well. And obviously the fund house is very good. Nothing wrong with the fund house, because ICICI is a very large fund house and they're one of the best in India as well, right? Now, coming to the second fund that we wanted to look at, that was Nippon India Large Cap Fund. It's right here. Let's look at this as well. Last 5 years return. Okay, last 10 all-time high is also here. Last 5 years, if we had put 10,000 rupees, it would have been 63%, slightly more than the 55% that we saw in ICICI Bank. Again, here you can see the slight difference in holdings. They have HDFC Bank again at 9%. They also had around 9.9. The second largest position is Reliance, and ICICI had a second largest position in ICICI Bank. So here their third largest position is ICICI Bank. So that is how they have played it. They are 98% invested in the market. Only 1% is in cash right now at a 44,000 crore AUM. Okay. Again, financial services is the highest, 34%, similar to ICICI large cap. Coming to the Sortino ratio, their Sortino ratio is much better than the Nippon. Their Sharp ratio is much better. Their beta is again much better. Their alpha is much better. So from all 4 tick mark standpoint, Nippon beats ICICI Prudential from a fund standpoint. P ratio is also slightly higher on that end, and the top 5 ratio is also lower compared to this, so they have a less diversification risk compared to that, right? And the expense ratio is also lower at 0.68 compared to 0.86 of ICICI. Now, if I go back here and I look at the top funds, and these are the funds which have given great returns over a long-term period, I can see that Nippon India and ICICI are the top 2 funds. There is Canara Robeco as well, which is the number 3, Invesco at number 4, and Mirae Asset at number 5. But if you ask me, I think I will go with the safer players, because look, I'm getting two good guys, okay, two good companies, ICICI and Nippon, almost fighting neck to neck. Yes, one has a slightly higher expense ratio than the other, but that is okay because both of them are fighting neck to neck. And me, usually, I don't like investing in just a single fund unless it is very aggressive the way I do it. Like when it's small cap, I usually just go one fund, but technically it does not matter because you're not optimizing for that 1.5%. So if I had to choose two large cap companies over here from all parameters, whether it is the return standpoint from 10 years, return standpoint from 5 years, CRISIL rating from both having 5 CRISIL rating. If I had to look at their Sortino, their expense ratio, everything from all of that, these two funds seem good. Now, it doesn't mean the other funds are good because please understand, last performance or past performance does not mean future performance will be good. So definitely there will be someone else doing better. So if you want to have recency bias, which I don't believe in having recency bias, basically go and click on 1 year last returns and you will see there will be a lot of fluctuations in it, right? You take it more on a further average standpoint. Again, in 3 years, Nippon and ICICI come back to the top two. So I don't want to overanalyze things because the main name of this game is to build wealth over a long period of time. So if I'm investing this and trying to build wealth for a long period of time, then it's a great opportunity for me to do so. But I hope you guys got an understanding of this. The two large cap funds that I would pick today, as of today, for 10 years to 20 years horizon would be Nippon India Large Cap and ICICI Prudential to hedge my bets completely. Now again, guys, before we end the video, I want to give a big shout out to our sponsor, Grow, for actually helping us create such amazing content for you guys. So if you want more information about Grow, you can definitely check out the link in the description below. And if you want to like this video, I would definitely like you to like it a little bit. Also subscribe the video because we put a lot of effort and thought into creating videos for you guys. And if you got any information from this video, please give a nice like or a hype in the comment section as well. Okay, let me know if you have any questions. Don't worry, I'm there for you. Let me know in the comment sections and I will take care of it. This is me, Shashank Godappa, signing off, guys. Take care. See you guys. Bye bye.